My name is Elias. I'm 78 years old now. I've watched the sun rise and set over more stock market crashes than most people have hot dinners. I've seen the Dow drop 500 points in a day. I've seen it double in a few years, and I've felt my own heart race every single time. For decades, I was that guy, the one who opened his brokerage app first thing in the morning, last thing at night, and every hour in between. My blood pressure knew the difference between a green day and a red day better than my doctor did. Then one morning, about 12 years ago, I looked in the mirror and didn't recognize the anxious old man staring back at me. That was the day I made a decision that changed everything. I call it the 65-year rule, asterisk. It's very simple. You build your money as if you will not look at it again until you are 65 years old. Not 65 days, not 65 weeks, 65 years. That single rule has given me more wealth, more peace, more health, and more time than any trading strategy, hot tip, or fancy chart ever did. Today, I want to tell you exactly why I stopped checking the market every day, what the 65-year rule really means in practice, and the 3 high-value systems, finance, productivity, and health, that now run my life on autopilot. If you're tired of feeling sick every time the market sneezes, stay with me. This is the gentlest, most powerful advice an old man can give you. The day I realized daily checking was poisoning me. Let me take you back. I was 52. My portfolio was doing fine, actually better than fine. But every morning I would check. If it was up 0.8%, I felt like a genius. If it was down 0.8%, I felt like a failure. My wife started saying, "Elias, you're not yourself on red days." One October in 2008, you remember that year, the market fell 18% in a single month. I couldn't sleep. I lost 12 pounds in 6 weeks. My doctor said my blood pressure was concerning. I was making good money on paper, but I was miserable. That's when I asked myself a brutal question. If I never looked at this number again until I'm 65, would I still be rich? The answer was yes, because history had already proven it. Let me show you the numbers that finally convinced me. Take $100 and put it in a simple S&P 500 index fund at the beginning of 1965. By the end of 2026, that's 61 years later, that $100 had grown to *42, 636 **. That's more than 10.4% per year on average, including every crash, war, recession, and pandemic along the way. If you had checked every single day during those 61 years, you would have lived through 1973-74, 48%. 1987, Black Monday, 22% in one day. 2002, 49%. 2008-09, 57%. 2020, 34% in a month. And still ended up 426 times richer. But most people never see the 426 times part, because they panic and sell during the 57% part. I decided I don't want to be one of those people anymore. So I turned off every notification. I deleted the brokerage app from my phone. I told my financial advisor, call me once a year on my birthday and only if something is truly broken. Otherwise, leave me alone. That was the beginning of the 65-year rule in my life. What the 65-year rule actually means. It's not magic, it's mathematics plus human psychology. The rule has 3 parts. One time horizon equals 65 years. From the day you start investing seriously, say age 25, until retirement age 90, because we live longer now. That's your true measuring stick. Everything shorter is noise. 2. Check frequency equals once every 65 years. Hyperbole, a little. In practice, I now look roughly once a year, usually on January 1st, just to rebalance. But the mindset is, I will not react to anything in between. 3. Systems over willpower. You don't try to ignore the market. You build systems so strong that ignoring it becomes the easiest thing in the world. Let me show you the 3 systems that replaced my old anxious habits. System 1, finance, the set it and forget it engine. I now run my money like a very boring, very reliable factory. 100% in low-cost index funds, mostly global stocks plus a little bonds after age 70. Automatic monthly contributions from my bank account. I never see the money. Dividends automatically reinvested. Rebalance once a year on my birthday, takes 20 minutes. Tax-advantaged accounts wherever possible. That's it. Because of this system, compounding does 99% of the work. In the last 12 years since I stopped checking daily, my portfolio has more than tripled even though I added very little new money. The market did the heavy lifting while I slept, gardened, and spent time with my grandchildren. Here's a little mental exercise I do when people ask me for stock tips. Imagine 2 friends who both started with $10,000 at age 30. Friend A checks every day, trades frequently, tries to beat the market. Friend B never looks again until age 95. Historical data says friend B will almost certainly be richer, often by a lot. The difference isn't luck, it's behavior. System 2, productivity, reclaiming 300 hours a year. How many hours a year did I waste staring at red and green numbers? Conservatively, 30 minutes a day times 250 trading days equals 125 hours. Plus the mental energy of worrying at night, easily another 175 hours of lost focus. That's 300 hours, 12 full 25-hour days. Now those hours belong to me. I use them for high-value work. Writing the book I always wanted to write, mentoring young people in my community, learning Spanish at 78, I'm terrible but I love it, and building a small vegetable garden that actually produces tomatoes. When your mind is not hijacked by daily market noise, you become dangerous in the best possible way. You start projects that take months or years. You finish them. That's real wealth. System 3, health, lower stress, longer life. My doctor says my blood pressure is now boring. The highest compliment a 78-year-old can get. I sleep 8 hours without waking up thinking about the Nikkei. I walk 10,000 steps most days because I'm not glued to a screen watching CNBC. Stress is the silent thief of years. Every time the market dropped 5% and I felt that knot in my stomach, I was literally shortening my life a little. The 65-year rule gave those years back. I'm not saying you'll never feel a twinge when the market crashes. I still do, but now it lasts 5 minutes instead of 5 months. How to start the 65-year rule today, even if you're 25. 1. Open a brokerage account if you don't have one, or use your 401k/IRA. 2. Set up automatic monthly investments into a total stock market or S&P 500 index fund. 3. Delete the app from your phone. Use the website only once a year. 4. Write on a piece of paper, I will not look again until your age plus 40 years. Tape it to your monitor. 5. Tell a trusted friend or spouse. If you ever see me checking daily, remind me of the 65-year rule. That's it, the systems do the rest. Last month my grandson, he's 19, asked me, "Grandpa, what's your biggest investment regret?" I thought for a long time. Not selling in 2009, I said. Not buying more in 2020. Not the crashes I lived through, the days I wasted worrying about them. Then I told him, the market has never lost money over any 20-year period in history, not once. So why are we treating every 20-minute period like it matters? He looked at me, nodded, and I could see the light go on. I hope the same light is going on for you right now. You don't need to be smarter than the market. You just need to be more patient than the market. The 65-year rule is the gentlest way I know to win that game. Thank you for spending this time with an old man. If this video helped you feel a little calmer about your money, do me a favor. Hit the like button, subscribe, and share it with one friend who checks their portfolio too often. In the comments, tell me, how often do you currently check your investments? And what's one small change you're going to make this week? I read every single one. I may be old, but I still love hearing from you. Until next time, invest long, live well, and remember, the best returns often come to the people who simply refuse to look. Take care, my friend. I'll see you in the next one.